Hi, I'm here to deliver your Q1 Financial Advisor sales highlights. I'm not going to sugarcoat it, folks. Q1 was a rough quarter. If we look at total gross sales and net flows, they're both down from what we saw in Q1 2022. Gross sales came in under 30 billion, whereas in 2022 it was over, and net flows basically broke even, coming in around 200 million. To gain a little more perspective on this, let's walk through the layers of data we have in Financial Clarity. Let's start with the wrapper level, because I think this can be quite telling about which clients may be struggling or not. At the end of 2022, ISS actually turned negative, which was fairly significant. What we've seen in 2023 in the first quarter is we've seen a bit of a turnaround in this. ISIS has crept slowly into the positives, registering under 100 million. And then where we've actually seen the drawback has been in general investment accounts, where net flows have turned negative to the tune about 500 million. These accounts, though, were what was driving a lot of the flows in the previous year. In 2022, the first quarter, this would have been closer to 2 billion in positive flows. So we've seen a difference there. But overall, we didn't really see growth in really any of the wrappers. So I naturally asked, where is the money going? And to do this, I looked at some of the statistics that are released by the Bank of England. If we look at household deposits, compared to 3 months ago at the start of the year, the deposit balances are actually down. And then second piece, if we look at consumer credit's also trending upwards. So all in all, I think it's just tough conditions for clients with inflation, with how the markets have been going, with interest rate rises. I think there's a lot of challenges out there for the end investor. But I'm not here to just rain on your parade, because maybe Q1 showers will turn into Q2 flowers. Let's look at where the opportunity was. So let's start at the firm level. We saw around 800 financial advisor firms post net flows above 1 million. So this tells me there are still opportunities to gain new client assets, and there are firms winning here. And if you want to know who's winning, come talk to us further. If we look at a second layer and we talk about platforms, about half of the platforms we recorded had positive net flows regarding the financial advisor channel. Take it a step further, now let's talk managers. Well, if we look at the big flows among managers, we saw 12 fund managers post positive net flows over 100 million, which was greater than the number of managers 7, which we saw post net outflows of over 100 million. So we had more managers winning big amounts than we had managers losing big amounts. Okay, well, where are they finding these opportunities from a fund perspective? There's a few ways we can look at this. Let's start with active passive. Passive continued to win in Q1, but not by a wide margin. Passive flows look to be about 1 billion, that being positive flows in Q1, whereas active had outflows of roughly 1 billion. So not a big difference, but we do see that slow creep towards passive that we have seen for some time now. Another way to think about it is which of these fund sales are influenced by models or not. So we're talking about model portfolio gross sales and net flows here. Well, if we focus on the net flow perspective, we see a similar split to active passive. Model influenced fund net flows were about 1 billion to the positive, whereas non-model influenced flows were about 1 billion to the negative. So again, we see models making a difference, helping some managers achieve those positive flows, but not exactly on a wide scale. Now finally, let's talk about sector. And since we ended by talking about model portfolios, let's start with sort of the mixed sector. And we really see a mixed bag here, pun intended. And what I mean by this is we look at the multi-asset solutions from a fund perspective, we see volatility managed in the more aggressive allocations winning, and the losers were the more conservative allocations. And then the final comment is global funds tend to be winning, whether that's equity or fixed income, whereas the biggest losses were in the UK and European equities, which is a fairly old story. All in all, even though Q1 saw managers, advisors really have to navigate choppy waters, there still was a lot of opportunity there. And if you want to learn more about our data, please reach out to learn more about the story.